Welcome back to the channel, everyone, and thank you for tuning in to another video. Let's talk about this today. You want to become a great scalper, right? What are the steps that you need to simply take? From me to you, what do I see as the most important elements that really will put you in the position to becoming a great scalper, regardless of the markets that you choose to trade when trading futures, okay? You want to become a great scalper, right? Let's talk about it right now. So maybe you're sitting there thinking, okay, let me think for a moment, okay? Well, take a look at this. I say this and I say this every single video almost. You know why? I'm going to say this right here because the fact is it is truly important that you master market structure. It is truly important if you want to be consistent. And it is truly important if you want to become profitable that you master market structure. I'm telling you this because I don't care what strategy you're trading and using. If you do not know how to consistently read and understand the market, you're going to take losing trades. And those losing trades could break the bank. They could cause you to fold every account you have, whether personal or through some past prop firm evaluation, PA account, whatever they call them. It will happen. You've got to understand how to read the market. And it's pretty simple. I've covered this in multiple videos. And the reason why I reiterate this, people ask me, why do you talk about the same topic? Because, you know, there are always newcomers. There are always beginners. There are always new traders that come across channels, right? And especially when they come to a great community like ours, right? Okay? And they're seeking for information. Maybe they don't have a strategy. Maybe they don't know how to scalp the market correctly. Maybe they don't know what scalping is altogether. Maybe they're just simply taking every little pullback trade they see, thinking that, hey, if I take this trade because I think the market is trending on a pullback to this area of support, I'm going to catch it and I'm going to go long, right? I don't trade support and resistance. Now, I'm not knocking anyone who does, but there's a bigger picture at hand. There's a bigger move or play that's at hand. When you see the market swinging and it's trending in a direction because supply and demand works best, okay? When the market is doing what? When it is trending to the upside or to the downside, we've got beautiful swings. When there's aggressive buying, coming out of a swing, pushing up. Coming out of a swing, pushing up. We're breaking consistent structure, areas of structure, I say, to the upside, right? So as those type traders, as supply and demand traders, we're simply looking for moves to capitalize on when the market either pulls back to demand or supply. Aggressive buying demand, aggressive selling supply. Simple as that. Now, the difference between being a great scalper versus one that's on or moving towards becoming an experienced and professional level scalper, three things. They already know, okay? But we already know how to read the market. The structure, that's important. Number one, that's step one. Okay? Number two, we know how to draw our zones. We know which zones are high probability zones, which ones are low probability zones, which ones we're going to take a gamble at based on probability, because that's what trading is. Okay? It's a game of probability. All right? And then number three, waiting for the market to reject. Okay? Maybe you have your own certain way or strategy that you use as a means of rejection that allows you to get into a trade. I'm going to simply just show you just how I do it, okay? We're going to look at maybe one or two zones, all right? But again, market structure, being able to depict and draw high probability zones, and number three, looking for rejection. Now, the rejection part for me does not come from off of a higher time frame chart. Now, I could trade using multiple pair of charts, or I can trade just really following market structure on a lower time frame and strictly trading from that 12 range chart, which means that's just trading from one chart. That's all I need without even looking at the higher time frame. Okay, if you're a beginner trader, you'll get to that level, okay, in time. But the strategy of really what I dive deep into is using and having multi-confluence across multiple charts, or at least two charts. Okay, that's going to give you an AG more confirmation to get into your trades. So I'm going to show you an example first. And again, I've shown this setup before. This is off of the ES futures, okay? So let's take a look here, all right? It doesn't matter if you trade the micro futures or the mini futures. It doesn't really matter. This is just off of the ES futures, okay? Because that's what I trade. Haven't done it in a while because I just haven't liked how the market's really been range it. And yesterday, I didn't do any trading. And I'm seeing, well, yeah, okay, now it's breaking back to the upside. So first and foremost, we've got to understand the structure, right? What do we see here? The market is just making higher highs and higher lows. So structurally wise, what are we doing? We're just pushing higher. We're trending. So when the market, it was just doing this right here before it kind of pulled back here, I'm only looking for long positions, right? All right. But then the market shifts. Now we know the market, the tide could change. When I see the market breakthrough, and I talk about my confirmation or means of what quantifies for me. Well, let's not say quantifies, but what confirms the market has changed for me is when I see the market break through an area structure to the left-hand side, and then we start to get continuations of breaking structure to the downside. So a break structure makes a low, lower high, breaking through that low, then I can say, okay, the market may be trying to change direction here, right? But again, it could go back up. So, but we just have to trade what we see based on what the market is doing and showing us according to the structure of the market. Now, the market's moving to the upside here, all right? Yes, this was a supply zone here. And it makes the highs up here. And then it starts to move to the downside. So we start breaking structure to the downside. We took out this area here. We push down, pull back, broke structure lower, making it a little low. So this is an area of supply. We should all know that by now. Simply put, because this is an aggressive area of selling. Now, what do you notice in this zone right here? I'll leave that there. What do you notice right here? When the market started pushing to the downside, aiming and making a new low here, we can see there was a gap, right? A void, okay? An area of imbalance resting back to the zone itself. I talk about that. That's one of the parts that makes an area of supply or demand in the style of how I trade either high probability or low probability. If this candle here closed and the next candle that came down, meaning this candle here closed and broke below this green candle here, and then the next candle came all the way back to, including the wick, back to the bottom end of this bullish candle here, it closed the gap, okay, at the area of supply. Now, there is a gap also from this last bearish candle, second candle, third candle, that did not pull back to the bottom end of that first bearish candle. So there is an imbalance there. But this is what I call an untested high probability zone. These are the zones that we want to see. So structure-wise, we're moving to the upside. Structure-wise now, we are bearish, moving to the downside because we start to break structure. Again, this doesn't mean that this could just end up being a nice pullback, okay? Decent retracement just to push higher here. And by means of looking at the market right now, it appears that we are trying to break higher. We haven't completely broke this area at the top here yet, okay? So we're still kind of moving sideways, all right? But we are pushing up to the upside, okay? Just in a range, if you want to call it, okay? But going back to here, untested, high probability. Again, structured, short. It could be short-term lived, but right now, I'm looking because of structure-wise for a nice short. Supply, untested zone, high probability zone. We got an imbalance resting back at the zone. Hey, it all sets up for a recipe for me to look for and quantify for a nice short opportunity. So all I do then is just go to my lower time frame chart. Okay, all right, and scout, because I scout. I'm not a intraday position or swing trader. I don't do that. While I leave my trades running on for hours at a time, I don't do that. Okay, I am a great scalper, and I look to take what I could get. I love to get at least 10 points in the market on the NASDAQ at a time or more. But it just depends on, price action. We all know that, okay? But this is how we master things and looking and understanding the structure of the market. Understanding is it a high probability or low probability setup. You got to understand first and foremost how to draw the zone. You got to look at it and identify, is it a high probability or low probability zone? That's going to make the difference of you wanting to have interest in taking that trade when the market gets back to that zone or not. Okay? This is what makes the difference of people breaking and winning. All right? So, okay, so now I'm on my lower time frame chart. This is really the last step I do. Once the market's tapped back into, I draw the zone, structure-wise to the downside, and then I'm looking to, from the last part, the rejection. But I'm down on my lower time frame chart because I'm not taking my trades off a higher time frame chart. I'm looking at the lower time frame or lower base chart. This area right here, all that we like to call clustering, back in this zone right here, this is confirmation. It's confirmation to show that there were multiple zones off of multiple charts. So we got that multiple chart confluence going on there. And all we're doing is looking for rejection on off of 12 range chart. Okay. All right. So when the market gets back to the zone, typically speaking, I like to see if I'm trading in a market zone off my higher time frame 60 range chart, I want to see what the market is. If the market's taking some time to get back to the zone, you know. So for instance, like right here, I'm gonna show you. Because it didn't immediately come back to the zone. Meaning immediately it would have pushed down here and came back. It did. It pushed down, pulled back, broke a little bit more structure to the downside, more aggressive selling before it pulled back. So in this case right here, what I want to see is and wait for is for the market to get to this area here, to break structure back to the downside, pull back to to an area, and then go short. So when I start seeing this rotation at the tops right here, okay, all right, we do have a 12-hour demand zone resting right here. But again, I want to see a breaker structure. So the market, when it taps into the 60 range higher time frame zone, okay, so the market breaks a structure right here, okay, pulls to the downside, pushes back, pulls back, all right. And at this point, because I'm looking at my higher time frame real quick, I know, you can know that, look, there are imbalances that need to be filled on the way back down, okay? This was just a pullback, okay? The market really hasn't shifted direction where it started making or taking out internal or minor areas of structure back to the upside here, all right? We just pulled back to this zone, leaving imbalances back to the downside, all right? And because we haven't shifted back to the upside, meaning breaking or re-breaking structure back to the upside, it's going to reject this area and come back down and try to at least test and fill these imbalances here. So on the lower time frame, I'm looking for that setup, looking for that demand setup to go short. So once it starts breaking here, yep, I could have got into the trade right here with a breaker close of the candle here, but then it comes back against me. All right, and that's fine in a sense that you should know when it comes to like have a area where your thresh, meaning how much pain are you going to take, how much where are you going to place your stop loss? You don't want to go into too much drawdown, right? So my stop typically would be probably at the back end of this area right here, where it's starting to break this area structure to the downside off the lower time frame chart at 47.60. As you see, the market comes back there and wicks it out maybe 1 to 2 ticks. You got to understand this, and I say this in many videos, they're going to do that, okay? You have to understand. That's why I always say in some of the prior videos, please do not place your stop loss at the back end of an area tick to tick, okay? This was where the market came back up on the higher time frame, started rejecting, breaking structure, small area structure back to the downside. And as you can see here, what do we have right here? Okay, this is where the move started at. So originally speaking, once it starts breaking structure to the downside, I'm going to put my stop at the back end right here. All right, and if you put it right here at the back end of the swing, once the market broke structure and you're looking for to take a short right here, well, it comes back up there and it stops you out. But it's not. If you pay attention here, it's not even 3 points there on the NASDAQ. Give yourself some room. You're going to have to on a trade. I'm going to put my stop at the back end right here, all right, and give it a few ticks right here. Got to with the NASDAQ because it swings. You must understand that. And that's just not that, but you have to understand how they move the market. I'm talking about that, the market makers. They're going to want to. They know what people are getting to their trades at, all right, and they're going to test those to stop you out. That's their game is to take your money, So when the market goes back up here, this is still rejection. It's giving us what most people like to classify as what? An M formation here. All right, take a look. And then it breaks structure to the downside. But you already should kind of have a heads up and know with the move that it made, pulling right back to supply those imbalances back down the lower time frame I just showed, it's going to aim to fill those imbalances back to the downside there, and that it does. Now, let's say you missed this move right here. It keeps breaking structure to the downside. Pushes up or pushes up, retraces, and then it breaks again to the downside here. This here is a untested, high probability supply area off the lower time frame. And we haven't come down to fill all the rest of the imbalances. Let's see. That last imbalance on that retracement here back to the downside is going to be down here at fill this area right here. Back down to 47.17. And you see it came right down there before it started pushing back up. It came all the way back down and filled every bit of that area of imbalance back in. So if we got into the trade on this pullback right here at 41, wait for the break and close of the candle to the downside, could have got in right there and took it all the way back down to 17. That's what I do each and every day. This is how you can capitalize on nice swing or nice moves using a higher time frame to mark up the zones, okay? Look for the opportunity to get into the trade on the lower time frame, but waiting for the rejection setup to take place for you, and then you capitalize and take a trade, all right? take it back down or take it in the direction, looking at the areas off the higher time frame. Yeah, you can scalp it on the lower time frame. Maybe you got in for a scalp, a few points, whatever the case is. But use your higher time frame to guide you, to let you know where the market can go, is what I'm trying to say. All right? So again, you got to be able to read the market structure. 2, you got to be able to identify what's the high probability and low probability zones, how to mark them up. And 3, you have to know how to get into the trade based upon when you see areas of rejection off the lower time frame charts when the market has pushed back into retrace back into those higher time frame zones. That's all I have for you to get in this video here today, guys. Hopefully this lesson helps kind of open your eyes up more so you can understand the system, the way that I trade using the strategy that I do every single day in my own personal trading, okay? If you're interested in becoming a Discord member, find the link down in the description portion of the video. Click on it, invite yourself in. It's free of charge. Come over and join us on the trading floor on the Discord, all right? Also, people always ask me, send me DMs, hey, Mike, how do I become an elite member for $6.99 to where I can gain access to your trade breakdowns as well as receive the video playlist? That's a hand-selected list of videos that I put together link by link that I think this is probably today marks the 700th video, I believe, today that I've created. So what I'm trying to say is a series of link by link videos, if you become an elite channel member, that you can gain access to, that pretty much covers the core of how I trade, the strategy. And then the trade breakdowns, what they do is they guide you and provide additional information, more detailed information about the trades I take, what I was looking at, why I got into the trade, just my whole mindset, okay, leading up to a trade. All right. But that's all I have for you guys. If you're interested in becoming an elite member, click on the join button right here. You see right in front of you. It's probably next to the share or download. You'll see a button that says join. Click on that. 2 tiers will pop up. You want to choose the one that says elite channel supporter, all right, or elite channel member. I forget how it's titled. Or you can scroll down to the description portion of the video. Right under the Discord link, you'll see where it says become a member. Click on it and make sure you choose the elite channel supporter tier for $6.99 a month, and you gain all that additional access to all that great valuable content. All right, guys. I'm going to get over to my trading today. Hopefully, I can get into a couple good trades today. I'm going to engage over in the Discord as well, hopefully. But I'm going to sit back and unfold. Today's Friday. We'll have to see what the market has to provide and give us today. Take care, trade safe, and I'll see you in the next video.